A lot of attention being paid to the health of the U.S. consumer and whether they are still going to keep spending their discretionary dollars on travel. We're at the Bank of America Gaming and Lodging and Leisure Conference in New York City. And with me, my guest, Geoff Ballotti, who's the CEO of Wyndham Hotels. It's great to see you this morning.
Great seeing you, Contessa. And it's the busiest show these folks have ever had. Attendance, I just heard from Danny Assad and Sean Kelly, it's up 25% over last year.
I think because there's a lot of investor interest in what has been a very strong segment of the discretionary consumer spending.
Yep.
And the question about whether that lasts, in part because, Geoff, we're seeing some cracks in international inbound travel to the United States. Las Vegas has been through a real summer slump.
Sure.
What are you seeing at the start of September, back to school, back to business travel?
Sure. International remains strong. We were just talking about your international vacation this summer, and we're still seeing Europeans travel, inter Europe, Asians travel, inter Asia. There has been some pullback to your reference here, but things were really strong starting from last November, post-election. It's been 8 months now of this new administration. November was strong, December was strong, January, February was strong, and we saw what we saw in February. But we're still very optimistic looking forward. When you say cracks, we're not seeing cancellation rates tick up. We're not seeing average lengths of stay here in the United States shorten. We're not seeing booking windows shorten. So we're very optimistic. If you look historically at revenue per available room, it domestically has averaged a 3% growth CAGR over the last 30 years. So the question is, when does that all reset? When does that come back to where it was in November, December, January, and February? And you're certainly seeing the interest from developers here in the United States. Now they believe is a great time to be building new hotels. Because
that has also seen a bit of a let's wait and see what happens. Some of the companies that I cover actually announced on their earnings calls, you know what, we're going to pause on our CapEx because we don't know what's coming down the pike. Is that resuming?
In the select service segments in which Wyndham Hotels and Resorts operates, in the economy, the mid-scale, the select service business that was so resilient during COVID, that did so well, that was the first to recover, you're seeing incredible interest in investment right now. Our new construction pipeline, 20 consecutive quarters of growth, is at an all-time high. We're seeing ground breaks accelerate. We're seeing a new construction pipeline accelerate. And we're seeing it more so here domestically than we are anywhere else in the world. So there's a lot of money on the sidelines, and there's a lot of investors that are following that, hence, you know, the interest in shows like this one today.
Where are you seeing the most opportunity right now in the domestic travel and leisure part of the business?
The extended stay segment. When you look at what's happening domestically, with the infrastructure bill, with all of the private new construction that's going on, that's being announced, we track 150 data centers that are around hotels that we operate here in the United States. There is an abject lack of housing for that extended stay demand. It's outpacing supply by 3 to 1. Supply overall is at an all-time historical low in terms of new room additions here in the United States, but there's no segment that's seeing more upside than extended stay. We have a new brand that we launched a year ago, Echo Suites by Wyndham. We have executed nearly 300 contracts. We have 30 under active development right now. We've opened a dozen in the last 2 years. And developers believe that at some point, a cycle will begin anew. And most real estate cycles last anywhere between 7 and 10 years. And they believe if they could break ground now and get a new construction Echo Suites by Wyndham in the ground now, that is going to be opening at the beginning of that cycle that will hopefully run 7, 8, 9, 10 years. The last cycle, which just ended pre-COVID, was 11 years, the longest running cycle that this industry's ever seen.
The two things that we're watching at the macro level, what's happening with the labor market and what's happening with inflation, especially now that some of those bigger tariffs are going into effect. What's your thought about how that affects your industry?
Every developer that we talk to, interest rates have been too high for too long. But capital has become, since the election, more available. They don't love the rate that they have right now on their construction loan, but as they always say, I'm married to my Echo Suites by Wyndham, I'm not married to my loan. At some point, I will refinance. I think there's great optimism that those rates, while high, They still pencil from a return on investment standpoint for the hotels they're building, but at some point they're going to refinance and they're going to start ticking down lower.
Geoff, it's really great to have you right here. It feels like we're in the penthouse to the world with the Empire State Building right here. Thank you for joining me.
Thanks for having us.